Hello, everyone. So in this video, we will be learning the audit of inventories, cost of sales, and trade payables. Now, I understand that you have already learned the computation aspect of inventories, cost of sales, and trade payables in your financial accounting subject. So since this is an audit subject, we will focus on the perspective of the auditor. No, so our main focus is not to know firsthand how to compute the proper balances of inventories, how to compute for the correct cost of sales, and how to determine the right amount of trade payables. But rather, we are on the investigative side because we are auditors. Now, in this subject, we are auditors. So we focus on the perspective of an external auditor. So let's begin. So let's start with the audit of inventories and cost of sales. Now, you also have to understand why these three accounts are discussed in one setting. So because we have inventories, cost of sales, and trade payables, right? So if you can recall their key accounts, diba? I'm not sure if this works. Okay. Never mind. But if you can picture out the account of inventory, diba? We have the debit side and the credit side. And since inventory is an asset, so the normal balance is on the debit side. Whenever we buy or purchase inventories from our suppliers, then we have to debit or increase the inventory balance. And if we purchased it on credit, meaning to say giutang nato siya, so that will be a debit to inventories and a credit to a trade payable. Normally we call it accounts payable. And then every time we sell an inventory to our customers, then that would entail a credit or a decrease in the inventory balance with the corresponding increase in cost of sales, diba? So if you remember the journal entry to record the sale of goods under a perpetual inventory system, we debit cost of sales and credit inventories. So you can see how these three accounts are interrelated, very much related to each other: inventories, tapos cost of sales, and then trade payables. So here are our audit objectives and procedures with respect to inventories and cost of sales. And again, we have the assertions. We have the 5 assertions here. We have the existence or occurrence assertion, the completeness assertion, rights and obligations, valuation or allocation, and then presentation and disclosure. So always remember these 5 assertions because regardless of the accounts that you are about to audit, regardless of the accounts that you are about to investigate, we should always go back to these 5 assertions. Right? Okay, so the balance-related audit objectives with respect to existence or occurrence is to determine whether inventories exist at year-end and represent items held for sale in the ordinary course of business. This means that if you are to look at the balance sheet of the company, diba, sa balance sheet man na i-present si inventory. Let's say na dito, inventories worth 1 million. As auditors, we need to determine whether kaning report ng 1 million inventories actually exist. Okay, actually exist. So how do we determine, how do we check whether the inventories that are reported actually exists? So we can obtain listings of inventory and then we can reconcile it to the ledgers. Then pinakasikat jud ni siya, we observe the taking of physical inventory and conduct test counts. We also can confirm inventories in public warehouse and with consignees. So common sense naman sad, how do we know whether kaning report diri sa balance sheet naagi na siya, exist na siya? So we can go to the warehouse and observe the physical count being done. So makitaan gani mo dito physically naagi di siya dinhi. And then for some inventories nga wala nimo nakitaan sa warehouse, it could be that these inventories are held by someone else. Okay, let's say puno na ang sa warehouse or wala di warehouse dito na gibutang sa public warehouse na for rent or naa sa mga consignees. You can also confirm their existence. through sending out confirmation letters to these public warehouses and consignees. Second assertion is completeness. And our objective is to determine whether all transactions related to inventory are recorded in the proper accounting period. Now, in my observation sa mga audit problems with respect to inventory, diri gyud na siya kasagaran musod. Di kani gyud ang pinaka-permi nga i-appeal sa mga examinations because diri musod ang atong knowledge on FOB destination and FOB shipping point, especially on purchases and sales occurring very near the year end and immediately after year end. So let's say if your year end is December 31, ang last week ana, very critical, last week of December and then first week of January. So for example, if we purchased several units from our suppliers, let's say December 30, and it was shipped on December 31, nadawat nato January 1. So how will we know kung ato ba na siyang i-appeal sa December 31 cut-off or i-appeal na siya sa next period? We have to check the shipping terms. So if it was shipped FOB destination, since kung FOB destination, di ba, ownership is transferred upon receipt by the buyer, pagdawat sa buyer sa inventories. So in my example, gipalit siya pag December 30, i-ship siya pag December 31, nadawat siya pag January 1. So if it is shipped FOB destination, it should be recorded sa next accounting period now, which is January 1. But if it was shipped FOB shipping point, we all know that if the shipping term is FOB shipping point, that means the ownership over the goods will be transferred to the buyer upon shipment, regardless of when received. So in my example, since the units are shipped already on December 31, then bahalag January 1 na siya nadawat, that transaction should be included in the current accounting period, in the cut-off. Okay, so muna siya kung giingon na very important when it comes to audit problems on inventories. Okay, another objective is to determine that inventory listings are accurately compiled and inventory quantities include all items on hand and in transit. Okay, so how do we attain these objectives? First, we obtain a final inventory listing from the client. And so mangitatag lista no mamonita na ilang inventories. And then after obtaining the list, we trace the test counts made during the inventory observation into the inventory listing. So pabalis yan no, kung sa existence, mag-una ka sa record, tanaw ka sa record, unya mo i-check naa ba gyud siya dito sa warehouse. Diri sa completeness, opposite. Tanaw sa nimo dito sa warehouse nga oy na inventory ani, and then imong i-check kung nalista ba siya sa records. So bali siya. So mag-una ka sa imong nakit-an dito sa warehouse and then imo siyang i-trace sa lista. Okay, if wala siya na lista, that means it is not complete. The list of our inventories is not complete. And then we also test the clerical accuracy of the final inventory listing. So next is we review the year-end cut-off of purchases and sales transactions. So mato akong i-explain kanina. Mga transactions that are related to inventory that have occurred very near year-end or very early pagka next year. And then we test numerical sequence of inventory purchase requisition. Remember in your study of accounting information system, di ba? Before we prepare a PO or purchase order, dapat na ay purchase requisition. And these documents are normally pre-numbered. So na siya yung numbers na nagsunod-sunod. So 001, 002, 003. So imong tan-awon ang sequence. If there is a document that is missing, so for example, pag tan-awon mo 003 and then iambak na siya 005. So what happened to 004? Ato na siyang i-investigate. Review entries to cost of goods sold, because again, cost of goods sold is very much connected to the inventory balance. So all entries to cost of goods sold should have a corresponding credit nga entry sa ato ang inventory account. Perform analytical review related to inventories and cost of goods sold. Make inquiries of management regarding inventory ownership and examine consignment agreements. Okay, another very important na procedure. No, so not all inventories that you can see inside the warehouse automatically belongs to the client nimo. So if nakita dito nga inventory sa warehouse ni client, you have to ask kinsay tag-iya ani, because it could be that the client is a consignee, a mere consignee. So kung consignee lang siya, even if naa niya ang physical possession sa units or sa goods, the ownership is still vested to the consignor. Kung kinsay nagpa-consign, no? Siya gyapon ang mo report ana as the owner. So since consignee raman ta, dili na nato siya i-appeal sa balance sa ato ang inventory. So you also have to look for consignment issues when you deal with auditing problems related to inventories. So again, when it comes to consignment, kinsay mo report ana sa ilahang balance sheet, it should be the consignor. Kung kinsa ang consignor, siya ang mo report ana sa ilahang balance sheet. Si consignee dapat wala, i-exclude na niya sa iyahang inventories. So this also relates to the assertion on rights and obligations to determine whether the company has legal title or ownership rights to inventory items and inventories. Items and inventories exclude items billed to customers or owned by others. So again, do not include those, although physically present in our warehouse, but are merely consigned to us. So exclude those items. Another assertion is valuation or allocation, and the objective is to determine whether the inventories are properly stated with respect to cost, determined by an acceptable method consistently applied. Remember your basis of inventory computations. We have, let's say, if you are using FIFO, average cost method, okay, and if you are into retail, naman sa tayo lower of cost or net realizable value, naasa tayo other methods under our retail inventory method. Slow-moving, excess, defective, and obsolete items identified and reduced to replacement cost or not realizable value if lower than cost. So if in the course of your observation of physical count, you notice that some of the inventories are already obsolete, guba na defective, expired na if na magana expiration date, so you have to make sure that the values of these inventories are taken out from the records. Okay, so muna siya itong audit procedure. Evaluate the basis and methods of inventory pricing, vouch and test inventory pricing, check inventory for quality and or obsolescence. Okay, so in my experience, no, we went to a warehouse ni Island Paints kay external auditor man po ko sa una. So I was able to observe a physical count, and then daghan mig nakitaan dito nga mga pintal nga gahi na. So dili na siya magamit. Those are already defective. Dili na siya pwede ibaligya. So that our role there is to check the inventory tags kung unsa nga mga items ang dili na mabaligya, and then make a corresponding adjusting journal entry to reduce the balance of inventory corresponding to the defective items. Then last assertion is presentation and disclosure. And our objective here as auditors is to determine that the inventories and cost of goods sold are presented and classified in the financial statements in accordance with PAS and PFRS. So more on the form, no, kung asa nimo siya i-present. So we all know that inventories are presented as part of current assets, while cost of goods sold is presented in the income statement immediately after the net sales. And in order for us to obtain these objectives, to achieve these objectives, these are the procedures that we are going to perform. Determine the existence of pledged inventory. So if naatay collateral nga inventory, no, naatay inventory unya nangutang ta sa bangko, gigamit na tong collateral ang ato ang inventory. We should make sure to have a disclosure sa ato ang notes to financial statements. We need to state such fact para makahibaw ang persons nga mogamit sa atong financial statements, they would know that our part of our inventory has been pledged, or let's say mortgaged through a lender. Evaluate financial statement presentation of inventories and cost of goods sold, including the adequacy of disclosure. Again, if you speak of disclosure, that means you need to include some notes in our notes to financial statements. Okay, so discussion of audit procedures, I was actually able to discuss naman the audit procedures here. So kani siya din is merely a reiteration. Okay, so this is an example of a final inventory list. So we have here the description of the inventory, how many of these inventories are there, and then the cost per unit. So total cost is obtained by multiplying quantity times the cost per unit. And notice here that the sample company is using the FIFO inventory method. And then price test, this is price test. And then, okay, so the proper valuation is NRV, right? Net realizable value. Okay, so here are possible errors that may result due to control weaknesses over inventory transactions. So normally, we are expecting the company to implement its own set of internal controls to make sure that there will be no errors and fraudulent transactions that will be occurring affecting our inventory. So here are the common control weaknesses. Okay. First, ineffective board of directors, audit committee, or internal audit function. If this happens, if our board of directors and our audit committee are ineffective, these are the examples of frauds or errors that might occur because of such weakness. So there might be intentional misstatement of production costs assigned to inventory. And then there might be intentional misstatement of inventory prices to make our financial statements look good. Another internal control weakness, ineffective cost accounting system, failure to update standard costs on a timely basis, ineffective input validation controls on the database of inventory costs, ineffective supervision of the personnel that enter the costs on the final inventory schedule. So more or less the same with this, since this is there is an inefficiency, then there is a possibility that the assignment of direct labor costs, direct material costs, and factory overhead to inventory items might be inaccurate. Or this will also lead to erroneous pricing of inventory. Diba? If you are into manufacturing, the total product cost will be direct materials plus direct labor plus factory overhead. And from the product cost nga imong na-determine, you have to decide on a markup. So pila man ang imong ipatong ana, and then makadetermine na ka sa imong selling price. So if sayop na daan imong product cost, sayop na sad ang imong pricing. Ineffective physical control over inventories, ineffective again. So, for example, if we have there a warehouse that stores all of our inventories, and then wala na to gibutangan og guard, no, walay physical security there. So there is a chance that the items will be stolen. Okay, and then that would lead to misstatement of inventory quantities, because we might think na dapat tayo 1,000 units when in fact we already have 80 na lang because some of them were stolen. And effective controls or supervision of physical inventory. So when we have an ineffective control or supervision of physical inventory, there is a chance that there might be miscounting of inventory. No, so for example, na isa ka employee na to dito nga setting pangawat unya wala sa supervisor, as in wala joy supervision at all. So during physical count, iyara pong ilaron nga oy ang na-count ako dito 100, when in fact ang iyang na-count 80 lang. So mo nang during physical count, like what we did during our physical count, dili ra gyud isa ra ka person ang mo count sa isa ka specific part of the warehouse. Naandyo na siya kuyog na supervisor, and at the same time us external auditors will also observe. Makakita sad ta nga pag count niya mao gyud tinud-anay nga mo na ang number of quantities left with respect to that inventory. Okay, there might also be intentional recording of purchases in the subsequent period. So more on the cut-off problems. Ineffective accounting procedures that do not tie recorded purchases to receiving data. So there is a possibility that there will be recording purchases of the current period in the subsequent period, which still relates to our cut-off problems. Okay, now the third account that is relevant in our study of this audit of inventory, for the first few parts, those relate to inventories and the cost of goods sold. And then the third account that is affected by inventory transactions are our trade accounts or notes payable. So kaning trade accounts, actually mo na siya ang atuang accounts payable. So accounts payable, or if there is a promissory note, we call it notes payable. Okay, again, we can see these 5 assertions gihapon: say existence or occurrence, completeness, rights and obligation, valuation or allocation, presentation, and disclosure. But this time, more on the payables na side. So for the existence or occurrence, our audit objective here is to determine that payables exist as of the statement of financial position date. Statement of financial position is your balance sheet. So for example, if you look at your balance sheet and you can see there accounts payable of 1 million, we need to make sure, kita as auditors, we need to know whether sakto basad ni nga naagyud ni utang nga 1 million, whether this liability actually exists. So how do we do that? How do we verify? We can verify by obtaining from the client a list of accounts and notes payable as of year-end and reconcile to the general ledger. So kaning list of accounts, these are actually subsidiary ledgers. So kung pila man gani ang total nga utang based sa ato ang subsidiary ledger, it should match to the balance as presented in the general ledger. We can vouch recorded liabilities to vendors' statements. So normally, the vendors or suppliers will send the client statement of accounts every end of the month. So imong i-trace, for example, based sa statement of account ni supplier number 1, ang atong utang niya is only 200,000. So you also can check whether sa subsidiary ledger sa client nato ang iyang utang gyud ni supplier number 1 is indeed 200,000. We can confirm recorded liabilities directly with suppliers and creditors by sending out confirmation letters. So how do we confirm? kita auditor mag-send og confirmation letter dito sa supplier. So we sa atong letter mo ask nila, can you please confirm nga naa kay naiutang si client si company blah 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 nimo in the amount of this much. Okay, so and then if naamang gani, the suppliers and creditors will have to send a confirmation to us auditors directly. Mayon sila nga, yes, we confirm na naagyo na siya. We can also examine bank confirmations for loans. Naman dito sa ato ang for loans coming from the banks or lenders, no, so directly sa bank account ni client. So we can also look at the bank statements for that. Next assertion is completeness, and our objective here is to determine that all transactions relating to payables have been properly recorded. So again, completeness pabaliktad, no, dapat let's say kakita ka dito og source document. So ang completeness magsugod ka sa source document and then trace it to the records. So we can perform purchases cut-off examination, test for unreported liabilities, and perform analytical procedures. So one example of analytical procedure here, for example, naigibutang dito sa income statement, interest expense, 100,000. Kung may tag interest expense, that means it is an interest paid that is related to a loan. Diba? So magbayad naman kang interest expense if na kay utang. So if na dito interest expense, dapat na kay makitaan nga corresponding utang gi-present din ha sa balance sheet. So that's a form of analytical procedure. Imong tanaw lang naaman siya interest expense, dapat naa siya liability. If wala kay makitaan nga liability but na ay interest expense, then that is your hint that there might be an unrecorded liability. There might be a chance that the total liabilities presented in the balance sheet may be understated. Next assertion is rights and obligation. And our objective here is to determine that payables represent valid and legal claims of third parties from the client. So how do we do this? In addition to audit procedures, number 3, review documentation in client's files, examine subsequent payments to creditors. So dapat valid and legal claim na siya. Na-siya valid and legal claim sa ato. So if, for example, nakabutang dito na patay utang na 1 million when in fact nabayaran na gyud siya, so there is no more valid and legal claim from us. So that liability should be deleted from the records. Valuation or allocation to determine that payables are recorded at the proper amount. So to do this, we can vouch accounts payable schedule and test computation of accrued or prepaid interest. Last assertion is on presentation and disclosure. Our objective here is to determine that payables are presented and disclosed according to PFRS. So how do we do this? Scan list of payables to determine that each major type of obligation is properly described and classified. Determine that contingent liabilities are properly disclosed. So kaning mga contingent liabilities, katun siyang dili pa ta sure kung makakollect ba ta ana. So for contingent liabilities, there must be a disclosure dito sa notes to financial statements describing the contingent nature of such liability. And obtain client's representation letter. Okay, so those are for our trade payables and notes payable. So kani siya gi-expound ra akong giingon ganina, but more or less the same siya. Okay, so this is an example of a confirmation letter or confirmation request na. Oh, ABC ka, dear sir, please confirm directly to our auditors mo ni atong auditors kunuhay the correctness of the balance of our accounts payable to you as shown below on the enclosed statement. So nakabutang diri. And then this is an example of an accounts payable confirmation. Okay. So manataan na. Okay, we now look at illustrative audit cases. Okay, here. So goods to include in inventory. Ball Company's inventory at December 31 was 1,500,000 based on a physical count of goods that are priced at cost and before any necessary year-end adjustment relating to the following. Our requirement here is to determine what amount should Ball Company report as inventory, the amount. So correct amount of inventory balance on December 31, statement of financial position. Okay, so based on the physical count, that's 1,500,000 daw. And then before taking into account these two items. First, included in the physical count were goods billed to a customer FOB shipping point on December 31. These goods has a cost of 30,000 and were picked up by the carrier on January 10 the next year. So na-appeal daw dire ang 30,000. Ang kana kuno nga 30,000 FOB ato kuno na siyang gibaligya sa isa a customer FOB shipping point. Now take note, basta FOB shipping point kano sa gani mo transfer ang ownership at the time at that time of shipment. So dire gi-appeal daw siya, was it correctly included? Was it correctly included? Yes, it was correctly included. Okay? Sakto gyud nga at kang ball pa na siya because it was shipped on January 10 pa man. So that's the only time nga tangtangon siya sa inventory ni Ball. But as of December 31, cut off na to, the 30,000 worth of goods still belongs to Ball. So it was correctly included. Okay? Na-include naman siya dinhi, we do nothing about this. Wala effect. Next, number 2, goods shipped FOB shipping point on December 28. December 28, no, gi-ship daw from a vendor to Ball were received on January 4. The invoice cost was 50,000. So this time, si Ball daw ang nikalit from a vendor. So of course, ang kaning 1,500,000, wala pa ni naapilan sa 50,000. Nga naman, because nadawat raman ni Ball pag January 4. Kunya, ang physical count was made on December 31. So, wala pa ni, ang 50,000, wala pa na siya na-appeal diri sa 1,500,000. But although it was received on January 4, the next year, no, it was shipped naman FOB shipping point on December 28. So again, we go back to our rule that ownership passes to the buyer upon shipment if the shipping term is FOB shipping point. So this time kay ang buyer is si Ball man, no? So Ball already owns these inventories worth 50,000 that were shipped on December 31. So December 28. So as of December 31, Ball already owns this 50,000. So from 1,500,000, we add the additional 50,000 goods in transit shipped FOB shipping point. So the correct inventory to be reported in Ball's statement of financial position as of December 31, 2017 is 1,550,000. So this is an example of a cut-off problem, right? Cut-off problem. Okay, next. Okay, wait. I think the continuation is here. Okay, we start here. I hope you can see I'm opening a second PDF file. Mindoro Auto Parts sells new parts for foreign automobiles to auto dealers. Company policy requires that a pre-numbered shipping document be issued for each sale. At the time of pickup or shipment, the shipping clerk writes the date on the shipping document. The last shipment date in the fiscal year ended December 31, 2017 was recorded on document 2167. So here, Mindoro Auto Parts is using a fiscal year. Dili siya calendar year. Fiscal year siya. So, ang iyahang cut-off is August 31, 2017. Shipments are billed in the order the billing clerk receives the shipping documents. For late August and early September, shipping documents are billed on sales invoices as follows. Okay, so take note, diba, it was mentioned that the last shipment made as of the cut-off period is August 31 was document 2167. And indeed here, money siya, diba? Money ang last na shipment pagka August. Okay, so late August, early September. I'm opening the second PDF. The August and September sales journals have the following information included. So day of the month, August 30 and August 31, sales invoice. Early September, September 1 to September 2, muna siyang sales invoices with a corresponding amount of sale. First question, what are the generally accepted accounting principle requirements for a correct sales cut-off? And we answer that here. A shipment should be, again, so ako naman yung mentioned a while ago, no? A shipment should be recorded as a sale at the date of shipment or the passing of title, whichever occurs first. So kung sa kuno either unsay mag-una ani, date of shipment or the passing of title, whichever occurs first. Ordinarily, a shipment is considered a sale when it is shipped, picked up, or delivered by a common carrier. So that's the answer for letter A question. Next, which sales invoices, if any, are recorded in the wrong accounting period, assuming a periodic inventory? Prepare an adjusting entry to correct the financial statement for the year ended December 31. Okay, we can see here sales invoices, no? So, money ang date sa mga sales invoices. Take note na to ang cut-off is August 31. So, money ang last ng mga sales invoices na. So, and then others are recorded early September. So, dapat, di ba, kay ang i-record na to as sale are only those items that have already been shipped. So, tanawa na to ha, i-match na to. Kutobraman kani. So, dapat kanira na mga sales invoices. Kanira nga sales invoices ang atong i-record as sales sa August. So, 4332. Ito na to. 4332. O, kani. It was recorded pagka September. So, sayop. Sayop, no? Sayop. Supposedly, August siya. Ito. 4326. 4326. Correct. So, correct. It was actually recorded on August. 4327. Correct. 4330. Correct. 4331. Here. So, it was erroneously recorded pagka September na. So, dire, sa August po, na ay nasayop o include kaning 4329 o 4328. So, dapat kani silang duha August, kana silang duha sa September. Okay, so the requirement here is to prepare an adjusting entry. Okay, so mo na siya na. Katong duha nga ako ang gi-point out ganina. Kani. These are overstatements. Overstatements. And then, kaning duha dire, na-understate ang atong August kay dito naman siya sa September na appeal. So, understatement na sila. So, the net adjustment based on their namte mga costs there, amounts. So, the net adjustment is 213.18. So, overstatement versus understatement. Okay, and then we debit, since this is a net understatement. So, na understatement, kuwang si sales. So, credit sales and debit accounts receivable. Next, assume the shipping clerk accidentally wrote August 31 on shipping documents 2168 through 2172. Assume daw, shipping documents, 2168 to 2172. Assume daw nga nasayop daw si shipping clerk, imbis September iyang ibutang kay August ang iyang nabutang. So, unsa kuno yung effect ana niya. So, may effect. So, the current year sales will be overstated. Kaya kung August ni siya, imbis September gid unta siya gi-ship, but August niya nabutang, that means that the corresponding sales invoices will also be recorded in August, which will make our sales overstated. Okay, supposedly September naman siya. Next, describe in general terms the audit procedures you would follow in making sure cut-off for sales is accurate at the statement of financial position date. So, how will we do that? The following procedures are usually desirable for sales cutoff. Be present during the physical count on the last day of the accounting period to determine the shipping document number of the last shipment made in the current year. During year-end fieldwork, select a sample of shipping documents preceding and succeeding those selected in procedure number 1. During year-end fieldwork, select a sample of sales recorded in the last few days of the sales journal and a sample of those recorded for the first few days in the subsequent period. Last question, identify internal controls that would reduce the likelihood of cut-off errors. So these are the internal controls that we can implement to prevent cut-off errors. Okay, use pre-numbered shipping documents, which the company is already using, no? Nag-pre-number man siya. Require the issuance of shipping documents sequentially, dapat walay skip na numbers. Recording sales invoices in the same sequence as shipping documents are issued. So dapat kung unsa pagkasunod-sunod ang shipping, mausad pagkasunod-sunod ang atong invoices. Requiring dating of shipping documents, immediate recording of sales and dating sales on the same date as shipment para consistent ang iyang dates. Use of perpetual inventory records and reconciliation of differences between physical and perpetual records. Okay, when we use perpetual records, manggod, diba, every time there is a movement in inventory, it will be recorded in the system. So para makakompare ta expectation versus reality ba? If we use perpetual inventory records, but we have an expected balance as shown in the system. So for example, the perpetual inventory records shows that we have worth 1 million of inventories, but then when we do the physical count, so mga total expectation, no, and then we compare it to the reality, ang reality na to being the value of the inventory based on the physical count. And then we can now point out, wala, sa records na to 1 million, pero pag count na to, 800,000 lang. So what happened to the 200? Okay, so this one you can study on your own, but basically, cut off for gihapon na siyang examination. All you need to do is to know the shipping terms. So kani shipping point, kani destination, and then after knowing the shipping terms, you need to look at if shipping, date shipped. Date shipped. Shipping man siya. Shipping. Okay. For the destination, you need to look at date received. Date received, date received, date received. And then based on these dates, you can now determine who owns such inventories. Okay. So in essence, kanidang invoice date doesn't really matter. It doesn't matter what controls is, unsa may ang controlling factor is ato ang shipping terms, and then kung shipping point, date shipped, and then if destination, date received, right? Okay, so that ends our study of the audit of inventories, cost of goods sold, and trade payables. Thank you so much for listening.